Today, I'm going to be taking a look at the Nasdaq and discussing where it might be going in the near future. So, first of all, holy smokes, can we talk about a crazy run since the beginning of 2023? I mean, wow. But why did it happen? Because it wanted to turn around and take out all of these highs, which act as liquidity because people who were shorting get underwater. They have to buy back. They have to buy back. So now, begs the question, where are we and where are we going? So, in the past, literally month and a half, we have been range bound. It's been hard for anyone to trade this because you're not moving. You're not moving anywhere. I mean, it's definitely tradable. There's definitely some moves you could have caught. You see, this was a turtle soup entry, right? So this is like just barely falling below the previous low. We call that turtle soup, meaning this is where people panic sell and smart money buys, right? You can see the same thing up here, right? And this is a range. So in a range, price moves from one side to the other side and back and forth. So that leaves the question, where are we going right now? To answer that question, it is as simple as what I just said like 20 seconds ago. We're in a range. Here's the high. Here's the low. Whichever side it breaks first, it will likely go run through everything else and go to the other side. Why? Because that's how smart money moves the market. They get everyone panicking on one side, that's called manipulation, and they send it to the other side. That's called distribution. So which way is it going to break first? Up or down? To be honest, that is, I mean, really hard to predict. You could say, like, look, well, you just made lower lows, and now you're making higher lows, so it might break up first, which could make a lot of sense because once it breaks up, it's going to break down. And when it breaks down, in all honesty, it seems kind of scary, but I think the next move down will take out both this low and this low after a while, because you have this final move down's midpoint, right? This is a place that might act as support. And then you have these two lows, which it would want to run through next. And why do I say that? What's another reason for why I say that? This is a weekly fair value gap. And I can say with a high degree of confidence that price is going to want to come back to this fair value gap, whether it's going to go down or whether it's going to go up. If it wants to go up, it's going to want to come back, fill this, and continue higher. If it wants to go down, it's going to want to fill this, go back up, continue lower. But it's going to want to fill this because, well, this is where people are going to want to, smart money's going to want to get orders filled. You can see this happening right here. See how price came right down to the fair value gap, the weekly fair value gap. That was the buy. What about over here? See how price came back to fill this. What about here? Came back to fill this. What about here? Came back to fill this. I could keep going. But it's a very high probability thing that it's going to come back and fill it. Even like right here, came back, filled it. These are very high probability, high time frame entries, especially when you're in an uptrend like this. I mean, regardless if this is the next move down all the way back to potentially this fair value gap, or whether it's going to be the next move higher. The short term idea is it's going to come back down to this fair value gap. But the question is it going to go up, down, or is it going to go down, up, big move down? But if you're just like a buy and hold type of person, entering at this fair value gap could be a nice idea, especially for a short-term play. I mean, I can't guarantee anything in a long-term play because, might hold this, like see how this held this, and then it fell lower. I can't say anything about long-term play, but I would say if you're a trader, I guess I shouldn't have said if you're a long-term player. If you want to like get a better entry point than right now, you could definitely buy it here. But if you're a trader, man, if you get to here, that's like trade of a lifetime right there, and you could do a very good short-term trade off of that as well. Look at this. This final move down. This is an order block, right? It's an order block. So price is going to have a lot of support at this level. Just for fun, let's measure this final move up. Let's measure the fib on here, right? Let's try to do this. Let's see if I zoom in anymore. So that's kind of maybe a stretch, but the purple line is inside of this, right? I'm sure I could maybe measure some more and maybe find some additional confluences, but at the end of the day, you're in this range. Look how long you've been in this range, a month and a half. And so I don't have this on this chart right now, but I have measured this out on other charts, and you have some like pretty high probability fib levels right up here and right up here somewhere. And so very easily price could come down, or price could come up first and then down. Maybe even goes up and down then up. But I think once it figures itself out, it's gonna want to come down here. Especially with April and May being a seasonality type of correction, it's definitely possible for a move down to happen. Maybe, it's entirely possible it might not even happen in April or May, or it might happen in the summer. But I think if you want to see a sustainable move higher, like for the rest of the year, you would want to anticipate it coming down to this weekly gap. And that it would be a perfectly healthy and natural correction as well. And if it doesn't, if it just rips up and rips up and rips up and then it comes down, that would be a way bigger red flag, I would say, for the health of the market, because you're not getting any healthy corrections, and that's pretty important. So to summarize, you're in a range. If it goes down first, it's probably going to break to the upside. If it goes up first, it's probably going to break to the downside. And then your downside target will be this line right here. This is the midpoint of here. And you also have the midpoint of this as well. So you got two different possibilities. Watch where price reacts. The opposing side, there are some fib levels right above here that you want to see price get a strong reaction off of, and then run all the lows. So that would be, let's just try and find it real quick. That one marked that high. Here we go. Do this blue one. Here we go, the red one. I can find additional confluences, but I actually have to go. I have a appointment I have to go to. So, really quickly, you can try measuring this yourself, but there are other like final moves down that line up with it. I would just have to measure it a few more times to find them. But yeah, this red fib. Try lining some other things up with it. Around 18,617. Maybe there's another one around here. There's I think 2 different ones. All right. With that, hopefully this video is helpful and you found this useful. Until next time.